Good morning, everybody. It's Thursday, June 6th, 5:26 a.m. Central Time. Grain markets are mixed this morning. July corn futures up 4.25 at 443.5. July soybeans up 2.75 at 11.80. July Chicago wheat down 1 at 645.75. July Kansas City wheat unchanged at 676.5 last trade. July spring wheat up 1.75 at 714.25. We had another losing day yesterday.
We sure did. Corn and soybean futures have posted lower closes in 7 consecutive sessions. The December 2024 corn contract peaked at $4.93 per bushel on Tuesday last week, prior to a 34-cent sell-off. The November 2024 soybean contract peaked at $12.25 on the same day last week, prior to a sell-off of 77 cents. U.S. planting progress for both crops is now ahead of schedule. A drier forecast for the U.S. Corn Belt has taken a major U.S. crop threat off the table for the time being.
The trade seems thoroughly convinced that there is no U.S. crop threat right now, that soil moisture has been recharged. The crop ratings were good. I know there's people that will debate the crop ratings, as they always do and will for the rest of the year. I don't have anything extraordinarily nice to say about the demand base. Corn demand's pretty good overall. I mean, it's solid. It's just we had such a big crop last year. And soybeans, we've got problems with export demand. So there's just no threat right now. And I don't know what a weather threat looks like. Let's jump to the weather.
So, a vast majority of the U.S. Corn Belt will see little to no rain over the next 7 days. Areas of the country that are likely to see rain include Missouri, Kansas, Oklahoma, and Texas. Cooler temperatures are likely to prevail through at least the middle part of next week. Rain may return to parts of the Western Corn Belt during the 8 to 10 day period. Even the extended GFS through the 16-day period leaves many areas of the region dry.
So to go back to what I said earlier, I don't really know what a bullish forecast would look like right now. I mean, typically, if it was in a normal June, where we had some drought here and there, I think this drier forecast would be seen as threatening, perhaps. But soil moisture has been recharged in such a manner that the market doesn't seem worried about a dry forecast. And I don't know what a bullish forecast looks like. Does it have to be 3 weeks from now and it has to be hot and dry instead of cool and dry in the early part of June? I don't really know. You guys let me know what you think. It's not odd from an agronomic standpoint, but just the really wet pattern that we've had, followed by now a dry, cool pattern. I'm not sure exactly what it means, but the market sees no threat.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's video with Brian Split?
Brian was on yesterday. We did a detailed run through of corn, soybeans, wheat, cattle, and hogs as it relates to charts. Brian is fantastic with charts and a bunch of really cool stuff as it relates to analog years. Like this year kind of looks like this year, and we've been following this pattern. Had some really great upside targets, downside targets, big picture perspective. Even you guys, our newsletter and stuff is geared toward the grain producer, but even the cattle people who subscribe really love this chart stuff. Pete Meyer's doing Sunday pre-open weather updates for us. He'll be back on Sunday this week, and Pete discusses on Sunday. They go out at 6 p.m. Central before the open. The weather situation, what's changed in the models, market outlook, that sort of thing. If you guys want to see the premium stuff, go to standardgrain.com this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. Today's video that I'm going to tape here in a few minutes is a grain marketing review, and I'm going to run through everything that I've advised as it relates to cash sales for corn, soybeans, wheat, old crop, new crop. What's the game plan moving forward? I'm going to kind of grade myself on what I've done so far and what I've neglected to do. Check that deal out this morning, guys.
Sovacon has reduced its forecast for Russia's wheat crop. The firm is estimating this season's crop at 80.7 million metric tons, down 1.7% from its previous projection and down 14% from its forecast in March. Last year, Russia produced nearly 93 million metric tons of wheat. The reduction is due to hot and dry weather and May frosts that have damaged the crop. Earlier this week, Russia's ag minister said the country could declare a nationwide emergency due to the situation. Industry experts believe that the emergency declaration will not lead to a ban on grain exports and will instead provide Russian farmers with financial support.
So 2 headlines yesterday. One was, I guess, bullish, and the other not so bullish. The first one was the estimate reduction from Sovacon, and they went down to 80.7, which is well below USDA's most recent estimate of 88. I'd imagine USDA comes down, but we don't know that for a fact. We know what's going on with Brazil and soybeans, and USDA has been kind of slow to move there. And then the other headline, I guess it's bearish that Russia says, yeah, emergency, but no export curb or export restriction. That's the headline that could really result in maybe the wheat rally resuming. It's been off for several days now. And if Russia were to come out and say, hey, we're considering an export restriction, that would be a really friendly item. But we've seen the opposite to this point.
So, more news about the wheat market. China plans to increase its wheat stockpile through purchases from domestic producers. State owned agricultural stockpiler Sinograin will ramp up purchases due to concerns over global supplies. As we just mentioned, poor growing conditions in Russia are expected to impact world supplies. India importing wheat for the first time in 6 years due to low reserves will also impact global supplies. Sinograin has already begun making purchases in some areas of China. During March, China canceled 19 million bushels of US SRW wheat. China also made cancellations of Australian wheat in recent months.
The way that it sounds, they're going to buy domestically and not on the export market. But I wouldn't be shocked if they bought some wheat on the export market. You'd love to see them come back to the U.S. The fact of the matter is, though, after this rally in the wheat market, and we're still quite a bit higher than we were, a couple months ago, U.S. wheat's not really competitive. It's just not. Russian wheat and the Black Sea stuff is still kind of the benchmark and is the low price on the export market. But you've got some big wheat consumers that are talking potentially imports. I mean, I think India is going to import a material amount for sure, and China says no, but I wouldn't be surprised if they did.
A resident of Mexico has died from the bird flu. The individual was 59 years old and died after being hospitalized for a week. The person contracted the H5N2 strain of bird flu, a variant that has never been confirmed in humans. Also notable, the H5N2 variant is different from the H5N1 strain that is behind the recent bird flu outbreak in U.S. dairy cows. The person had no recent history of exposure to poultry or animals, but they did have other underlying medical conditions. Yesterday, bird flu was confirmed in a dairy herd in Iowa. The confirmation brings the total number of states with confirmed bird flu cases in dairy cows to 10.
Seems like the livestock market's past this.
I totally agree, and it should be.
Okay, and it should be. So now this is perhaps there's a small chance that this turns into a broader public health concern, and that would be the take home.
Yep, that's what I would think, that soon enough they're going to start forcing vaccines on people, especially
Stop it. No, they're not.
Okay, we can move on.
Yeah, we can move on. I don't know. I mean, I don't know. It is what it is now. It's isolated cases.
Right.
And there are people they're talking about it, and we know that, was it Moderna or Pfizer had got some sort of government contract. I mean, there's people out there talking about it, but I don't think anybody's forcing anything.
Okay. U.S. ethanol production increased last week. Weekly output of 1.07 million barrels was up marginally on the week and up 6.8% versus the same week last year. Ethanol stocks were pegged at 23.1 million barrels. The print was down slightly compared to the previous week, but up 3.2% compared to the same week last year. Implied gasoline demand was down 2.2% compared to the previous week and down 1.7% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down 1.4% versus the same period last year.
As I mentioned earlier, demand for corn is pretty solid. I mean, the ethanol production numbers have been good. The stocks have drawn down as they typically do seasonally. We're also exporting more ethanol, which I suppose is a positive. It's just that we had such a big crop last year, and such a big crop is expected this year. I mean, it's the way people are thinking right now, and it's very early in the growing season. But as far as corn demand goes, I don't really have anything negative to say. I mean, it's pretty good across the board.
The S&P 500 notched its 25th record high for the year on Wednesday. The index gained 1.2% to close above 5,350. The Nasdaq also had an impressive day, climbing 2%. The rise was partially due to a rally in some of the world's largest technology stocks. Nvidia led the way, surpassing $3 trillion in value. Additionally, the expectation among traders that the Federal Reserve would cut interest rates twice before the year's end helped push stocks higher. Along with boosting stocks, that expectation also caused the 10-year Treasury yield to decline by 4 basis points to 4.28%.
Another all-time high for the S&P. It's now up 12.3% year to date and up 144% for from the COVID low that was posted in the, I believe, first quarter of 2020. So it's awfully impressive. You don't bet against the S&P over the long haul. It has corrections. Most of 2022 was a bear market that was associated with the rate hikes, and now we're off to the races again. I don't know what happens with the rate situation. Goldman says that a wall of money will fuel a stock market summer party, and that retail traders in particular get more involved in July. And this actually kind of goes against what I was always told traditionally about stocks. The old saying about the stock market is sell in May and go away. And I think that dates back to like the days where stockbrokers on Wall Street, which don't really exist anymore, stockbrokers would take the summer off and like go to the Hamptons or Nantucket or wherever they go. And I don't know that really happens much anymore. But in any case, there's a lot of positive sentiment, and the headlines are always going to be positive when the market's making all-time highs. What did cattle do yesterday?
They were lower once again. Feeders were an average of $1.04 lower. Live cattle were an average of 43 cents lower. Box beef finally hit the brakes on Wednesday. Choice ended the day at $314.79. That was down $209. Select ended the day at $300.90. That was down $357.
Outside market's pretty quiet this morning. U.S. dollar's flat. Stocks are flat. Bonds are flat. Crude oil is up 34 cents in the July WTI. It's 74.41. Have a great day, guys. We'll talk to you on Friday.